Ladies and gentlemen, good day and welcome to the Q3 FY2024 earnings conference call of Mech Limited, hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Natasha Jain from Nirmal Bang Equities. Thank you, and over to you.
Thank you, Yashasri, and good afternoon to all participants. Nirmal Bang Institutional Equities welcomes you all to the third quarter FY24 earnings conference call for Mech Projects Limited. From the management team today, we have Mr. S. Ramaya, Director and Business Development, Mr. Rohit Sajja, President, Business Development and Operations, and Mr. N. Arvind, Chief Financial Officer. I now hand over the call to the management for opening remarks, post which we can take question and answers from the participants. Thank you, and over to you, sir.
Thank you, Natasha. Good afternoon to you all. This is N. Arvind, the CFO of Mech. I have with me Mr. S. K. Ramaya, Director Business Development, and Mr. S. Rohit, President Operations and Business Development and Operations. I welcome you all to the earnings call Quarter 3 and 9 months of financial year 24. The performance for Quarter 3 and 9 months for the financial year continued as per our set targets for the entire year. The reported total income for Quarter 3 financial year 24 is 1,115 crore and the EBITDA is 141 crore. PAT is 61 crore. During Quarter 3 of last financial year FY23, the reported total income was 912 crore and EBITDA was 106 crore and PAT was 51 crore. So on quarter-to-quarter basis, Mech has demonstrated almost like a 22% growth on the top line, and with the growth of top line of EBITDA has gone up almost 34% and PAT has gone up by 31%. Q3 financial year 24 performance was satisfactory and on expected lines, despite a little slowdown due to 5 state elections. So the revenue mix for Quarter 3 as follows. Mechanical business has contributed around 231 crore. Civil business including railways and water distribution 596 crore. O&M 260 crore and electrical business close to 21 crore and other income close to 7 crore. Whereas during the last year FY23 Quarter 3, the contribution for erection business was 144 crore. Civil 492 crore and O&M was 260 crore and electrical business 12 crore and other income was 3 crore. Mechanical and civil has shown growth almost like 60% and 21% respectively. Electrical has grown growth of 71%. O&M more or less remained flat, but however this number again will go up significantly going forward. During Quarter 3 of financial 24, domestic business has contributed almost like 94% and the balance 6% has come from the international market. Similarly, power sector has contributed 47% and non-power sector is almost like 53%. Similarly, the total reported income for 9 months of financial year 24 stands at 2,923 crore and the EBITDA is 364 crore and PAT is almost 164 crore. Whereas during 9 months of last financial year, the reported total income was 2,435 crore, EBITDA was 281 crore and PAT was 134 crore. On a year-on-year basis for the 9 months, there is a growth of almost like 20% in revenue as compared to the last year. And with the growth of top line, EBITDA has significantly gone up by almost 30% and PAT has gone up by almost 22%. So revenue mix for 9 months is concerned, mechanical business has contributed 518 crore. Civil business including railway water distribution around 1585 crore, O&M 756 crore and electrical business close to 47 crore and other close to 17 crore. Whereas during the 9 months of last financial year, the contribution for erection business was 458 crore, civil business 1235 crore and O&M was around 682 crore and electrical business 52 crore and other income was 8 crore. Similarly, erection, O&M and civil business has gone up by 13%, 11% and 28% respectively and electrical business is down by 10% because not much order booking is happening on the electrical business. And the mix between international and domestic, the domestic business has contributed around 92% during the 9 months of FY24 and rest has come from the overseas business, it is around 8%. And the mix between power and non-power business stands at 52% and 48% during the 9 months of this financial year. FY24, because of the healthy order book and water business, will continue to contribute close to 23% of the total business. Other civil works in both power and non-power contributes close to 34%. And O&M will continue to be around 23%. And the mechanical will continue, both domestic and international will contribute almost like 18% plus. And transmission distribution will contribute 2%. So we will see that FY25 there will be a significant change in the business mix because of healthy order book. The contribution from O&M is going to be almost like 18% and erection business is expected to go up almost by 27%. And railway expected to go up to 1% and MDO this year will start with a small number and this is expected to go up significantly next 2 years. It is expected to be almost like 7%. So there will be a significant change in the business mix because of the increase in the O&M pie and the MDO business. Improvement is also seen in overall margin profile and same is further expected to improve gradually. And on reaching MDO to peak during FY26, the margin profile will improve to a greater extent. So depreciation cost as a percentage remain lower side on account of control of capex spending and the finance cost keeping aside interest on tax impact as a percentage to revenue remained lower side and they continue to be controlled on account of improved working capital and cash flow. With reference to our income tax guidance during July 22, as you all are aware of the H operations conducted by the Income Tax Department and the company received notices under Section 148 of the Income Tax Act. In response to the said notices, the company filed a return of income for the assessment year 2016-17 to till 2021-22 assessment year. And as a prudent measure to cooperate with the department and to avoid further protracted litigations, the company offered additional liability of 26.21 crore towards the income tax and 11.91 crore towards the interest on income tax and paid the entire amount during the financial year 24. We did not foresee any need for further provisioning on the income tax matter is concerned. With the better deployment of our capital improvement in margins, we have also seen improvement in the return on capital employed and this is expected to again go up significantly. Other developments include the operating cash flow for the period is almost positive by 21 crore, which is quite healthy. We are working on the same to improve further. Also, the average monthly collection of the company continued to be healthy. So net current days excluding cash and cash equivalent has substantially improved on account of improved working capital cycle, change in the business mix and change in the customer concentration. Net current days have come down to 125 days from 131 days. And on stabilization of the MDO business from financial year 25 and 26 onwards, we can expect significant improvement in net working capital days. And this can help the system generate larger operating and free cash flow. We can see quantum jump in free cash flow. More importantly, the gross debt and net debt remained controlled despite growth in the business and the order book. As on 31st December 23, the gross debt is close to around 499 crore and the net debt stands at minus 23 crores. But we can see, as on today, we can proudly say that Power Mech is a net debt-free company. And the debt equity ratio as on 31st December stands at 0.28, which has significantly come down because of the improvement in the cash flow. But if you see, net debt today is nil because of the net debt is almost zero. The status of the two MDO operations, coming to the two MDO projects, lot of developments and ground activities are happening in both the projects. The first project, Kotre Basantpur Stage 1 forest clearance from the government we got in November 23 and applied for Stage 2 clearance and the report is passing through various levels to the Additional Chief Secretary Jharkhand and they forwarded the file to MOEF and CNC on 13th February. And also consent to operate application filed and awaiting the approvals from Jharkhand State Pollution Control Board to start the works. These approvals expected to receive in next 2 months. Therefore, we can start the ground activity of OB removal from the month of May and coal mining will start from July 24. Coming to the second project, Kalyaneshwari Tasra project. The major required equipment mobilization was completed for initial mining activities. Environment clearance for setting up 3.5 MTPA capacity of washery is under progress and expected to receive the approval by July 24. R&R colony building construction of 190 units in 4 acres of land is under progress. Mining works have already started and OB removal and the coal production works are in progress. Since January 24, approximately around 80,000 tons of coal excavated and targeting to excavate 3 lakh tons by end of this year. So regarding order book status, coming to the order backlog as on 31st December is around 55,858 crore with both the MDO and excluding the MDO, the backlog is almost 16,125 crore. Similarly, the order book backlog as of today is around 57,328 crore with both the MDOs and excluding the MDO, it stands at 17,595 crore. For the entire year 2023-24, the company has set a target of 10,000 crore order inflow and we keep the target as it is. We have received orders worth of 6,768 crore as on today, plus 3 projects worth 1,780 crore are in L1 status and project worth of 5,500 crore which are bidded and awaiting for the results. We are likely to see the balance order addition in Q4. During FY24, large order increase is expected from the power sector both in the O&M and mechanical and civil construction. Our focus will continue to be in the industrial plant, O&M, railway, water and MDO projects. All the existing projects are on track and moving as per the schedule. These financial year revenues will be in the range of 4,500 crore to 4,700 crore, depending on the traction of FGD and MDO business. EBITDA margins remains the same as Q3. FY25 we should be able to achieve 30% to 35% year-on-year growth. Margins will be stable. We'll see a bit of upside depending on the mix from FGD and mining. We do not foresee any decline in the margin. Similarly, order book target for the current and next financial year looks to be comfortable. Power Mech is well set to demonstrate execution and conversion in the range of 32% to 33% of its opening order book in a year. In addition to that revenue from MDO business also ramping up coal production plant. Going forward, O&M and MDO business will drive the substantial growth in a significant way. And we have some more development from the business side. I will request Mr. Ramaya to add, please.
Yeah, thanks, Arvind. Thanks, Rohit, and our team here, and thanks to the participants. I think Arvind has given the overall numbers and various aspects of the business, financially and other things also. But what is happening in the market is a substantial bullish approach in terms of the investments coming up and opportunities opening up. And we can also see a change in the product mix for the better. What was a downside in the power sector is looking up now substantially. That has been reflected significantly in the mechanical business. The order backlog has gone up from 6,878 crores to 7,034 with a 22% increase. Civil side has gone up by 27% to 7,800 crores. And O&M is playing a major role because of a lot of new projects are getting commissioned of what was the backlog available by various private players and then NTPC and other players also. And that is where, we have made a lot of significant achievements in terms of substantial increase in the order booking there in the current year. And then, electrical, of course, it will have a subdued role. There's situation and also the competition and other things. And from the overall perspective, what we are saying is that in all the sectors, there is going to be continued investment. That is what is driving us the business. And the power sector, if we take it, there are 3 segments in which it is driving the business. The new unit capacity, where the projects which are already identified plants are 19,000 megawatts by NTPC, mainly 6,000 megawatts. And then the utilities around another 13,000 megawatts, and then private also is there. Adani is coming up at Mahan. And then if we add up the stressed projects for the 5,750 megawatt and 6,700 megawatt from the first stage and the second stage, all these things are under resolution, and many of these opportunities are getting converted, and we have taken the benefit of that in JSPL Angul and then in Vedanta, Sigatare. And then recently, in the case of Meenakshi also, both the revamping and the O&M job has come up. So that is a positive thing for the mechanical business. Installation, it is traditionally we are very strong. O&M, the order backlog has gone up by 66%. And one more development is there. On the O&M side, what we can say is the The conversion which will come up for the O&M also in the drinking water scheme, where we are doing about 2,725 crores of job. The conversion is happening faster. And now the order status also is that whatever orders are released, 3% of that will come as a O&M contract for the next 10 years. For that, that is to be added as a part of the order, and now that comes to 681 crores. Therefore, if we add up the total O&M profile in terms of the power, non-power, and also the drinking water, the order booking will go up almost to 2,500 crores by end of the year. And that should give a significant growth for the O&M progress and also better margins in the coming year. Now, apart from that, the new units business also is looking up. With orders grabbed from Mahan 825 crores, BHL also 354 crores, and then Vedanta for the stressor project at Singatara 396 crores. That is a positive development. This will continue to happen. Another major thrust has been the railways, apart from the roads. Railways, we have taken significant strides on that. Recently, we have taken Nanded, this one job, Yavatmal Nanded job, about 375 crores. And with all these things, what we can say is that the present opportunities together with the L1 position of the pending FGD orders with the Goenka group, and then one micro irrigation project and the railway project, we stand to have around 1,500 to 1,600 crores of L1 position. If that happens, it will significantly improve the overall order backlog. And apart from that, around 50,000 crores of order follow-up is under the progress in various segments for the different opportunities. Now, coming back to the overall position in the power sector itself, BHL has got orders of 55,000 crores. If you take the order of the previous year also, which is getting for conversion in the case of Lara, Yamunanagar, which has been ordered recently to BHL, Mahan, which has been ordered by Adani Group, then Talcher, which has already ordered, and then recently Talvira, 3 into 800 megawatt. Altogether, BHL's order book has ballooned like anything to almost 55,000 crores extra. And this we are hoping to get the conversions happening faster in the coming year also, and the last quarter also to some extent. And after the total projects which have been awarded in all these cases by NTPC, then Mohan and others is 7,720 megawatt. That leaves us more scope for the conversion of Power Mech as a contractor and a subcontractor. Our estimation in that is that something like 12 to 15,000 crores of order booking, order opportunities will come up in the next year also. And some of the projects we can see how much is happening in the current year also. Now coming back to the overall capacity addition in the power sector, the present position is that the coal and lignite capacity stands at 214 gigawatt. It will go up to 280 gigawatt. In that, about 27,000 gigawatts are implementation. Another 30,000 megawatts will be under ordering and execution, which has started. As I told you, about 7,720 has been already awarded to various players, and then balance also will come up. That should help us. That should throw us overall supply and EPC contracts for the mainly it may go to BHL unless L&T doesn't take a major call, or some of the Chinese player outside players will come. The estimated opportunity for the coming year in all these things for the overall supply is more than 2 lakh crores. Therefore, our own estimation is that at least 15 to 20,000 crores of opportunity should come up in the overall power sector in the coming year also. Then there is the railways. We have seen the annual investment is exceeding 2.5 lakh crores as part of national infrastructure pipeline, and that will continue to happen. And then metro projects, the present mileage of 870 kilometers will go up to doubling of the track, the metro stations to almost 1,700 kilometers. And then the major investments which are very much useful for us is coming in the railway maintenance shops, workshops, and then maintenance depots for the metros also, which we already entered there. For that will add up a lot of opportunities which will be focused, because railways give good terms of payments with the privatization clauses and advances also. And that is a major focus for our opportunities. And then roads is there. We have already completing a major project for Adani in KK Road in Kogar Road in Andhra Pradesh, Telangana. That should give us a lot of track in terms of bidding for the good projects in the future also. And there is unlimited opportunities in the road sector also. And then railways also should grow up. Therefore, our assessment is that presently 50,000 crores of opportunities are closely following. Some may also get closed in the current year. We have to see how much would happen based on the election status and also when the election commission will give a date for this election. Then that depends on the ordering also to some extent. But what we can say is that next year, the way we are looking at all the opportunities in terms of power sector, O&M, and then non-power sector, particularly in the railways, then metro projects, and then irrigation, and then of course the road project. Perhaps it is easy to target 40,000 to 50,000 crores, and should see the growth potential and increasing the order backlog. That is what is I can say. Therefore, further thing on the MDO and other things, the international operations and many other developments of the company, Rohit will bring out the facts.
Hello, good afternoon everyone. Thanks for having us on the call. This is Rohit. So as Arvind has touched upon our mining operations briefly, I'll give you the other data in detail. So we have already started mining in the recent MDO that we have won, and we have already mined around 85,000 tons of coking coal over the last 1.5 months. And we expect this capacity to touch 2.5 to 2.8 lakhs by the end of this financial year, in the next 1.5 months. So we'll be booking significant revenues from Tasra. And coming to the first mine, I think all of you are aware of the political situation in Jharkhand. So our forest clearance stage 1, there were some complaints points raised by the authority, so we had to refile it. And after refiling the secretary, and because of the political disturbance happening in the state, it got there's a slight delay, I think a month's delay, but we expect to break ground in the month of May, as Arvind had said, and by July we'll be starting mining here as well. So that's about both the MDOs. And coming to overseas operations, this we are making significant strides in overseas operations as well, and we have added a couple of new clients this year. We have also won a small maintenance project in Qatar. We have added Qatar as a new geography, and we are making significant strides, putting in some efforts in Saudi Arabia. There's a lot of spending happening in the power sector. They have plans to, Saudi Arabia in general has plans to add more than 25 gigawatts of capacity over the next year. This is mostly combined cycle capacity, and Power Mech is, we have experience of executing combined cycle power plants in the past in the region. So we are one of the front runners. We have been talking to EPC companies, and they've already collected quotes from us. And the maintenance, I think this year we have won a maintenance project in Bangladesh, and you'll see this going forward. You'll see this long-term maintenance contracts and this trend, Power Mech taking more and more long-term maintenance contracts for the years to come. And because a lot of public sector utilities, they were always giving out contracts, but they have started giving out long-term contracts. So slowly the trend is changing, and you'll see Power Mech taking more contracts in the next 1-2 years to come in the maintenance space with different power utilities. We're already working with the likes of DIVA, Dubai Electricity and Water Authority, SIVA, Sharjah Electricity and Water Authority, ADNOC, Abu Dhabi National Oil Company. We are doing some work for the refinery and also the power plant there. We are also executing a long-term maintenance project in Nigeria with the Dangote Group, where we have constructed their power plant, and now we are the consequent O&M model was also given to us. So this is an update on MDO and overseas business.
We can proceed with question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Okay, sure.
We have a first question from the line of Nirav Vasa from ASK Investment Managers. Please go ahead.
Hello, sir. Thank you very much for the opportunity. Is my voice clear?
Yes, sir.
Yeah. So, sir, first thing that I wanted to know is that out of the pending order backlog that we have of almost 17,596 crore rupees, what percentage of order backlog would be from BHEL? Sir, even if you have a rough cut number, it's fine.
No, VHL, that separately it is there, but we have to compute and give that information.
Sure.
It is separately there.
Get your point, sir. And sir, wanted to understand about the competitive scenario. Like what we have seen is that in the thermal power for a very long period there was practically a lull. So lot of EPC contractors and the supply chain which was operating in the thermal power system are not in the best of the financial and technical shape. So according to your assessment, as this scenario opens up in forthcoming years, how do you see competitive scenario panning out? Do you expect these smaller players to again bounce back, or do you see a scenario wherein you along with some of the other peers would be the major players who would be benefiting from the consolidation of it?
Yeah. Now, there are two aspects in this. Let us first understand how the ordering will happen. As for the major competition for the EPC players, now VHL stands out significantly. We have seen they have taken almost more than 5,500 megawatts of orders in the recent times in the current year, or into almost 55,000 crores in the last 1.5 years. Now L&T is still there, but we have seen some sort of a, not a drift, maybe they are loaded with a lot of orders in Middle East and domestic market in infrastructure, and they may be having a second look. Now another part I'm talking from the EPC point of view, the third player perhaps can play a role in the General Electric. Of course, as the MNC, they've got their own constraints in terms of bidding structure and the risk management perspective which they have to figure out for the Indian market, because being MNC, they are more risk averse. But they are still pursuing a look at that, but they need to have some partnership because of the undergoing of the many organization changes and also certain things which are taking on mergers and amalgamations with the various power sectors in the international market also. For that, they need some inputs also. Now, that is first, unless the Chinese players come as a backup in the later stage, what Chinese dumped the market in early 20 years back or 15 years back, unless that returns, we feel that VHL continue to play a role, and they've got a capacity of 14 to 15,000 megawatts of manufacturing capacity in their on the manufacturing engineering. They can easily cater to 5 to 7,000 megawatts without any problem, provided the working capital improves. Now coming to the contracting and subcontracting, if you look at it, there are 2-3 segments. One is the main plant equipment and the balance of plant equipment, and then the civil works. Now, in both the cases, we have got a significant presence as Power Mech. We are perhaps, we are the leading player with a substantial market share in the main plant, boiler, turbine, and the ETC. And then the civil also, the main plant with the balance of plant, except for the cooling towers and even chimney we have done in one project. Most of the civil works in the plant we can do. Therefore, there are many players in the civil package. At least 7 to 8 players are there. In the mechanical also players are there. What has happened over the years, owing to the downward trend in the market, in the power sector investment, and the competitors' inability to grasp the opportunities in the balance of the market in the other than our non-power sector, there has been a downtrend in the appetite for many of the private players, and that is to be seen. Because recently we have seen Mahan, we have taken a major job. And then with even VHL we have taken a job at Talcher, and then with Vedat also we have taken, and the Meenakshi also recently we have taken up. therefore that shows the trend. At least 50 to 60% of the market share of the power sector business, we should continue to get it, or if not more. That is mainly because Power Mech has established a strong presence and execution capability, which we can proudly say not many can match in terms of resources management, equipment resources, construction management, and then construction support services, what our team can provide with our huge headcount, both in the installation business and other sectors also. Other synergy, we are one of the few people, perhaps next to L&T, who can undertake the end-to-end solutions in the construction, then operation maintenance, and then civil work, structural works, mechanical work. That type of synergy, there are not many players. You have got a Simplex or a JMC for the civil work, or you can have Indwell and Texel for the mechanical work. But or they may not have a combination of the player who can do the civil, structural, mechanical, and that is where the advantage comes. What we have seen in Mahan recently by Adani, and also we have seen even with BHL also, and then Vedanta Group also. Therefore, competition can be subdued. There is appetite for so much. Suppose the BHL gets more orders. Suppose next year they get 7,000 to 8,000 megawatts. Then that will add up to another 60 to 70,000 crores. Therefore, this will continue another 2 to 3 years at the rate of 50 to 70,000 crores per BHL. Therefore, accordingly, there is a further scope for us to enhance our potential in the power sector. That is what our assessment is.
Thank you very much. This is really helpful. So, sir, if you can help me understand, your scope of offering per megawatt can be how much crores? Like, I wanted to compute your scope of work per megawatt in crores.
No, I tell you, present market rate going is 8 to 8.5 crores. Of course, that is a comprehensive EPC job. It's an end-to-end solution of a total solution. That is engineering, procurement, construction. In that, 55% goes to the main plant equipment, 55%. That means almost 4.5 to 5 crores. And the balance of plant will be around 3.5 to 4 crores. Normally, the construction part of the business, the mechanical equipment for the EPC contractor will come to about 10 to 12%. That we can say around 80 to 90 lakhs or 1 crore per megawatt. Now, if it further comes down to the base level of a subcontractor, it can be something like 5 to 8%, 6 to 8%. Therefore, I can say roughly, suppose if it is customer is 80 to 90 lakhs for BHL per megawatt for the services portion and the main plant only for the equipment, our portion can be something like 40 to 50 lakhs per megawatt. Of course, in the case of civil, that will add up another 10 to 15% based on the scope of the material available. That means the customer gives the material like cement, steel, then the overall value of the contract will go to almost 10 to 12 lakhs per megawatt, 10 to 12% of the per megawatt. That means again it will come another 80 to 90 lakhs. I will say both together can go up to almost equipment, erection, installation, and then civil work, structural work. If you add up all these things, for the services part of the work at site, out of 8 crores, you can take 1.5 to 2 crores per megawatt. Now, that is as far as the new installation is concerned. Now, as far as the O&M portion is concerned, once it comes for operation, because all these plants nowadays customer is outsourcing also. You have seen recently, now many new projects will come, mostly they will outsource it also. For that, we can take about 10 to 15 lakhs per megawatt. Now, this is how, therefore, in that way, opportunities are there for Power Mech installation, civil work, structural work, once it is commissioned as a O&M service.
Great. This is really very helpful. So, my second question is pertaining to what is the amount of debt that you can borrow to fund your growth? And FY23, the net worth of the company was 1277 crore rupees. So, if you can help us with the banking limits available to chase this growth.
As of today, we are running with debt of around 499 crores. So we are running around 500 crore fund limits with the working capital lenders. Roughly around 50 crore is our equipment loans. So more or less, we are maintaining within the existing limits only, and with the we recently increased the fund limits from 450 crore to 500 crores. So out of which we are using only at 75% to 80% only working capital utilization we are doing. So we are getting the mobilization advance from the new works, and we are managing the working capital. So far we are not forcing any increase in the fund limits. We are maintaining with the existing mobilization advances from the customers.
No, my question was, because the growth can be really very high and sector has seen massive consolidation, the odds of order inflows for your company can increase exponentially. So wanted to understand what is the maximum capital employed which can come. So 1277 crores is your net worth. So what is the maximum amount of debt which banks are currently ready to lend to you, both fund and non-fund?
No, they are okay to, as long as the rating is good and if my projections are good, in line with the projection, up to 25% of my projections they are ready to fund, sir. And my top line of 4,000 crore, if I am doing business, they can able to fund up to 25% of that turnover.
25%.
500, 600 crore. So we can borrow another 500 crore to 600 crore. Depends on my top line. So we are not planning to raise any debt, and we want to go with the low debt, and we are managing with the mobilization account.
Right. So other point is like apart from power, what is expected is that the hydrogen related capex can also increase exponentially. Any update? Are we chasing that opportunity? How do we intend to get into that entire ecosystem? Any updates can you share?
Yeah, actually the government's plan is to have a capacity per annum by 2030. Now already some pilot projects or experimental projects have been started by private players by Adani. Reliance is making a massive investment, 75,000 crores. Adani is making 75,000 crores. Now a lot of players are coming up. Now, as far as we are concerned, it's a part of the service business. Suppose the annual investment comes to 5 million tons, I don't have the figures, but the ballpark figures of what private players have ventured already, Adani, Reliance and others, it can be substantial. It can be lakhs of crores. Therefore, again, what I can say is that in terms of doing the work, civil, structural, mechanical and piping work, there is no big deal in that. We can easily do that. It consists of vessels, piping systems, civil work, structural work. And some inquiries have started coming, but we have to see it will come in a substantial way. That means pilot projects are coming up, not in a big mass scale. I think that will take another maybe one year or 1.5 years. Once it comes, perhaps that will add up to the additional delta in terms of the opportunity. But we have to work out the real details on that because things are not very clear in the market.
Thank you, sir. My queries have been done. Thank you very much.
Thank you. We have our next question from the line of Mohit Bansali from Aryan Group. Please go ahead.
Sir, can you hear me?
We cannot hear you clearly, Mr. Bansali. Please use your handset mode. No.
Yeah, can you hear me now?
No, sir. The volume is very low.
Hello, can you hear me now?
Yes.
Hello.
Yes, please go ahead.
Yeah. So thanks for the opportunity. My question is regarding your MDO. First one is Kalyaneshwari Tasra, which you spoke about. Have you started mining, and when the billing will start? And what kind of, coal you are generating, like coking? It's a metallurgical coal or it's a normal coal? Please, sir.
Yeah, thanks for the question, Mr. Bansali. So KTM, yes, Kalyaneshwari Tasra is in short known as KTMPL in abbreviation.
Okay.
So KTMPL, we have started mining and we have already mined 80,000 metric tons of coking coal. This coking coal, which is used as a raw material in steel plants, and it's washery grade coal. KBP, the second MDO, we plan to start mining in the month of May. So probably by
Sir, I'm asking, so 80,000 you have already mined, and what is the future plan? So you will continue to raise it to what level, sir? I hope you said that you will raise it to 3 lakh by the end of this year, 3 lakh ton per month.
We'll be mining 3 lakhs in total quantity, 2.8 to 3 lakhs in total quantity by March 31st, 2024. But, we plan to ramp up the production to slowly by next financial year, we plan to do 2 and then 3.5 because the mine peak rated capacity of the mine is 4 million metric tons per annum. And we are also awaiting the environmental clearance for the washery for which the terms of reference have been minuted and submitted. So once the washery is up and running, that's when we want to achieve our peak, which is 4 million metric tons per annum by end of FY26.
Okay, so next year you will be mining around 2 million tons. That's what you are saying.
Yeah, next financial year we'll be mining around 1.5 million metric tons.
So this will be then what? Because you don't have washery right now, what will happen to that then?
So we are still billing. We have a different price until the washery gets commissioned.
Okay.
So we expect to raise our first bill in the month of February.
Okay. Fair enough, sir. Fair enough. Thank you for the information.
Thank you. We have our next question from the line of Riya from Equitas Investments. Please go ahead.
Thank you for giving me the opportunity. My first question is in regards to the water projects of the Jal Jeevan Mission. So where are we looking at right now, and post-election, how do we see the traction following up?
What project?
Jal Jeevan Mission.
Jal Jeevan Mission. Can you repeat your question, ma'am?
So basically, I wanted to have water projects. Yes.
Yes, madam. Still, see, of course, overall scenario is like that. 3.6 lakh crores of the planned government investment started in 2019. It may go up to 2015, 16 or 2025, 26 also. And as on today, around 14 crore households have been connected, and we have got a presence. We are doing in UP 3 major projects, about 2,729 crore for about 1950 villages. Now, some more projects is bidding stage as it comes, the investments coming. We will continue to be there because we are focusing on the conversion of those orders now as on hand. Apart from that, many other water projects in urban infrastructure, sewage treatment plants, and then, micro irrigation and other things. Because we have one project we already bid, we have stand L1 for a irrigation project in Madhya Pradesh for 600 crores. Therefore, we find drinking water is a very good market for us. And as the tenders come in different states, for example, Maharashtra, Madhya Pradesh, then Tamil Nadu and Karnataka and other projects also, we will definitely go for that. We'll try to see what more we can do that there.
Got it. But I was asking more in terms of post-elections. Do we see a slowdown in ordering?
No, we are.
Yeah, can you repeat your question?
I was asking in terms of post-elections, do we see any slowdown, or are we seeing any slowdown right now in ordering? I'm sure the execution pace has picked up.
I don't think any of the projects, what we have done now, 17,000 some order backlog, what we are having, all the projects are in progress. We have not seen any stoppage of the work, or slowdown of the progress, or funding issues, or local issues. As on today, it is not there. Everywhere the customers are pursuing the projects aggressively. That type of any major hiccup we have not noticed. We continue to believe that all these projects will come up.
And currently, what does the pipeline look like?
Yeah, there is an L1 status of roughly around 1,500 crores. Of course, the old FGD where we stand L1 for the Goenka group of projects about 1750 megawatt, around 870 crores. We continue to pursue it. They are seeking extension. And then, there is an irrigation project of 600 crores, 650 crores in Madhya Pradesh, and then a railway project is also there. And the only thing, we hope if elections doesn't come in a way, perhaps, we can get some more penetration in that. Apart from that, the ongoing process, we have got about 5,500 crores of offers submitted out of the total immediate opportunity of 15,000 crores in infrastructure, in railways, and then in power, etc. But we have to see how much we can get it converted immediately. But next year, as I told you earlier, we can easily track projects for opportunities of 40 to 50,000 crores, and perhaps if not more.
Got it. That's very encouraging. That's it from my end. I'll join the queue for further questions.
Thank you. We have a next question from the line of Anupam Gupta from IIFL Securities. Please go ahead.
Yeah, good evening, sir. A couple of questions. Firstly, the guidance which you said that next year you are looking at 30-35% growth, that is basically only for the EPC business, right? Not including any mining revenues if you were let go.
I'm sorry, you're sounding muffled. Can you repeat your question, please?
Yeah, Anupam, please tell again. I think there is some disturbance.
Yeah, so what I was saying is the guidance of 30-35% growth which you talked about for FY25, that is prior to including revenues from mining, or that includes revenues from mining?
That is including everything, sir. The margins, depends upon the mix from FGD and mining. That's what I told you earlier. Should be between the range of 30% to 35%, including the variation between the FGD and mining, depending on the mix from FGD and mining additional.
So I was not talking about margin. I was talking about the revenue growth which you said, 30-35%.
Regular business.
Regular business, yeah. This current year we have almost touched 20% year-on-year growth. 25% we will touch to this year, and because we received the more order book during the current year, and additional new works also we received during the current year. So we are targeting 30-35% plus any additional, FGD. If it is anything additional, then it will touch by beyond that. Yeah.
Anupam, is 17,000 crores of backlog, 40% conversion. If you can take
Understand.
it 25 to 50%, that should exceed 6,000 crores.
Understand. And yeah, understand. And if you can you just update on the status of the FGD project or the Adani, which is somewhere around 8,000 crores of the total 70,000 crores? What is the status as of now?
Yeah, I think the order for Udupi project, now another 250, I think we have done almost 80 crores of ordering. Another 200-250 crores of ordering will happen in this month. It should be possible. Therefore, that will come for some conversion, modest conversion in this current year.
So we have, in Q3 we have recognized around 117 crore we recognize, sir, and whatever the orders we have placed on the customer, we may recognize some FGD order by before March.
So basically, this part of the Adani order book will get executed over FY25-26 fully, or what is the timeline we are looking at?
I think Udupi project is going strongly, 2 into 525 megawatt. Now, out of the total 8,460 megawatts, we have to see the other projects. There is Tiroda is there, then we have got so many other projects, and there are so many other issues on environment and then local clearances and PPAs also. I think this is one of the things, because they need to have a delta PPA for the existing power purchase agreements, and that should play some factor in that, and that is where FGDs, there is some and then engineering integration, because it's retrofitting which has to be done in a confined space, it is taking a little bit more time.
Okay. So ideally one should look at a 3-year sort of execution from now. I agree that should be a reasonable assumption.
Yeah, we can take for Udupi, it is going strongly. We have to see how they take shape for the other projects also. There are so many other things, and then the new, not only that, not only with Adani, with the other customers also, same status continues. Some sort of they are waiting for so many things in the clearances, engineering retrofit issues, and then the PPA issues. There are so many things are there. That is why little bit of a slowdown can be there.
Understood. And sir, coming to the mining side of it, so Rohit highlighted the target production for Tasra mine, which is 1.5 for next year and possibly reaching 3.5 in FY26. What are you targeting for the CCL mine in terms of production ramp up over the next 2-3 years?
Hi Anupam. So CCL, so we plan to break ground in the month of May, and perhaps the first year's contracted quantity is around 400,000 metric tons, and we will achieve 400,000 to 450,000 metric tons in FY25. And the year next to in FY26, the contracted quantities are around 1.5, and we plan to do around 1.6 to 1.7. So there is a ramp-up schedule for this, a gradual ramp-up schedule. And then the subsequent year is around 3, and the peak rated capacity is 5, which we are going to do in 2.5 to 3 financial years from today, which is FY27, is when we'll achieve 5 million metric tons per annum. But yeah, CCL is on its way. We'll start producing the first batch of coking coal, and we'll sell it to CCL starting July onwards.
Understood. This is useful. And one question on the international projects which you are taking. So you said you have added, and you're looking to take it in Saudi and Saudi as well. So those would be on the same lines as you did historically, right? So basically, it is an ETC contract which you are looking to do, and not material risk on your books, right?
No. It's only ETC. We don't plan to venture out into the civil or any other transmission and distribution space at the moment. All we want to focus on is ETC plus O&M in all the sectors that we are present in. It's predominantly power and oil and gas.
Okay. Understand. That's all for my side. Thank you.
Thank you.
Thank you. We have a next question from the line of Mohit Bansali from Aryan Group. Please go ahead.
Yeah. Thanks again for the opportunity. Sir, I just want to, you told me that in KTS you are going to mine in a big way in next 1 or 2 years, but your washery is still, you are going to get the approval. I came to know that BCCL has just opened one big washery very near to your mine, that is known as Madhuban washery. So management have any plan to, send their coal like outsourcing for washeries to get the coal washed and again send back to the principal?
Mr. Bansari. So our contract says that we cannot use any outside washeries to wash the coal until we construct a washery. So there is a Chasnala washery. We are aware of this Madhuban. I think it's internal to SAIL on what they do with this coal. So what we are currently doing is we are stocking it up in a stockyard, and now we have to deliver it at Chasnala washery. Initially, if it's any other washery until we construct the washery, then we'll have to decide it. SAIL has to decide internally and let us know. If it's away from Chasnala, the more kilometers, it will be compensated as well.
Okay. And sir, once again, you said that next year from Tasra you are going to mine around 1.5 to 2 million ton coal. Is that correct, sir?
1.5 to 1.6
million ton next year. So it will be around 1 to 1.5 ton every month, per month.
1 to 1.5.
Yeah.
It will be around 1.5 lakh, 150,000 metric tons per month, million metric tons per month.
Okay, sir. Thank you for my queries.
Thank you.
Thank you. We have a next question from the line of Subrata Sarkar from Mount Intra Finance. Please go ahead.
No, thank you. My question has been answered, so thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have a question from the line of Sabyasachi Mukherjee from Bajaj Finserv AMC. Please go ahead.
Yeah, hi. Thanks for the opportunity. My first question is, you have currently about 8,500 crores of order book in the civil business. And similarly, if I look at the erection segment, almost again 7,500 crores kind of backlog. What is the expected execution timeline over here, and do we have capacity to execute at such pace?
Yeah, I think this is doable based on the resources. We are having, the head code itself is 32,000. In that, of course, 10,000 we can take it from the O&M side. Balance 20,000 is there, mainly focused on the civil, structural, mechanical and ETC jobs. And then the cycle time for all these projects based on the ordering, what they have done is it varies from 30 to 40 months, something like that. Let's say average you can take about 3 years. Therefore, if you look at the order backlog as on today, for the civil and mechanical works together, it comes to around 16,000 crores. Therefore, what we have done peak in many of the ETC business and civil work in somewhere in 2012 to 2015, when a lot of orders came up and a lot of capacities were added. Annually, the capacity increased from 15 to 20,000 megawatts. Therefore, at that time, Power Mech was playing a major role. In fact, today, the largest number of ultra-critical projects we have installed, about 27 units across the country. And also, as I told earlier, we have got integrated approach of doing civil, structural, mechanical, ETC, and then post-commissioning O&M also. For we get a lot of synergy in terms of resources, and then capital, and then establishment cost, which we can do better than many others. And this is perfectly doable for us.
Okay. You said close to 3 years, that is almost 36 months, 12 quarters. So basically, if I just do a simple math of what would be our quarterly run rate, in 12 quarters, you have to probably execute 16 to 17,000 crores, which boils down to somewhere around 1,300 to 1,400 crores quarterly. Is my math correct?
Yeah, you are perfectly correct, because last month we achieved 1,100 crores. Now this month, this quarter perhaps it will go to 1,400 to 1,600 crores. And now, of course, the last 2 quarters always you get the better output and better this one because of the all ideal conditions. Now, taking that 1,200 to 1,300 crores is perfectly doable because of the enhanced order backlog. It will go up to 20-25% to each year. And then with that conversion also will improve. And in fact, it will add up to our better utilization of the assets, manpower and equipment also. That is a positive thing for us with this type of conversion for us.
Got it, sir. My next question is on the guidance. Just to clarify, you gave a guidance of 4,500 crores of revenue for FY24. And on top of that, 30 to 35% growth in FY25. Did I hear it correctly?
Yes, sir. Yeah. Yes.
Okay. Okay. So the follow-up to this thing is that you have currently about 17,000 crores of order book if I exclude the MDO contract. And let's say you end around the same number, 17,000, 18,000 crores of order book in FY24. That becomes the opening order book for FY25. If I do a 40% kind of a conversion, it comes to around 6,800 crores or something around 7,000 crores, which is again the growth number then it is very big if I look at from FY24 to 25. Where am I missing?
Yeah. I think, there are many large orders, but as railway orders, then, for example, road sector orders. Even the capacity, the order size of the installation business has gone up. For example, Adani have placed 825 crores. BHEL have given 354 crores. What we used to 100 crores, 150 crores orders, now it has doubled up, tripled up. Therefore, that gives and the shorter cycle time, more packages in the same period, civil, structural, mechanical. And then with common establishment, it is doable.
Sir, with 4,500, assume that FY24 is my turnover. Then if I add 30% on that, it will be around below 6,000. So my order book as of today is around 17,000. Even if you reduce 6,000 crore of FGD, further I may have to add another 2,000 to 3,000 crores of orders expecting to receive. Around 12,000, I said in my opening remarks also, we generally do on the 1/3 of my order book as a turnover. Every year we are executing. So it's easy, we can able to reach this number, and again MDO operations also will add to this number.
Next year order booking also will come. First 2 quarters, whatever orders booked, that will come for conversion in the second, third and fourth quarter also.
So we can hit around 6,000 crores FY25 ballpark?
Yes, that's what we are targeting, sir. 30% of the current, whatever the turnover we are going to achieve in FY24. Even if you take 4,500 as a minimum, then on that 5,850 will be my top line number for the next year.
Got it. Last question from my side. What, all these revenue numbers, what it will kind of have an impact on the margins? Do you have, we'll see some bit of operating leverage, how the margin should move?
Sir, if you compare to my we are more or less maintained with the Q2 and Q3 the same level, and compared to the previous year, there is an upside increase of 30% margins. Based on depends on the mix of FGD and the mining, probably the margin will go up, or otherwise we do not foresee any drop in the existing margins. It will continue the same level, at the same level.
Okay. That's all from my side. Thank you. All the best.
Thank you. Operator request has been initiated. If you'd like to cancel this request, please press *0 again. Give me a moment, please. Mr. Gupta?
Yeah.
Yes, please go ahead.
Yeah. So just wanted some clarity on the capex. So what is the capex you'll do for the EPC business, and what is the capex which will go towards the mining business in FY24 to FY26?
With reference to washery is concerned, approximately around 690 crore, which we projected the capex, total capex, out of which 240 crore we raised funds through QIP, and balance 450 crore we are raising a loan at Power Mech level. So by over a period of 26 SPV level, so by 26 the capex requirement will be around 690 crore for the washery itself. Apart from that, SPV level, we are raising funds for the HEM requirement and other plant requirements. We already, bare minimum requirement, we have already procured the machinery, and mining activity is going on. It depends upon the requirement of the site. We may raise additional equipments at SPV level.
Okay. So let's say if I look at the consolidated level, what should be the yearly capex which you are budgeting broadly, including SPVs and the EPC business?
EPC business level, probably at 450 crore is my, 690 is the capex requirement. And at the SPV level, then depends upon the availability of land and other issues. Then we have to see that majority of the funds we can, through internal accruals, we can fund those equipments. There is no challenge in terms of, we are not raising any much major loans at SPV level. We will, based on, depends on the requirement only, we will raise the capex.
Okay. That's all from my side. Thank you.
Thank you. We have our next question from the line of Ria from Equitas Investment. Please go ahead.
Hello. Thank you for the follow-up. I would like to ask, what is the current portion for international orders for us?
Backlog, 120? 113 crores.
Sorry?
113 crores backlog as on today.
130 crores.
113.
113 crores backlog. Okay. And currently in this quarter, you see that order intake on O&M has increased significantly. So what would be the top major orders that we received during the quarter?
Yeah, there are many orders. What has come in the...
Any major ones?
Yeah, we received one, the Ghatampur Thermal Power Project, around 263.57 crore.
Okay.
And another one is Meenakshi Energy, around 675 crore we received order from the Meenakshi Energy from Andhra. And another Dariba, Rajasthan, we received 2 into 91.5 megawatt Dariba, Udaipur, Rajasthan, Hindustan Zinc, around 229.2 crore. Mahan also. And,
Great.
yeah.
So going forward with the increasing contribution from O&M and with higher share of mining MDO orders coming into our numbers, what kind of margins are we seeing for the upcoming quarters and next year?
The reference to MDO operations are concerned because initially there will be a low revenue and cost will be less. So we are expecting there is a change in the mix during next year. It depends upon the mix probably between the FGD and the mining. Probably we can able to tell you in the next quarter post after getting the proper information from the site. We can able to explain you in the next quarter, ma'am.
Got it.
Depends upon the plan only we can able.
Got it. Thank you so much. The questions have been answered.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to management for closing comments. Over to you, sir.
I think thanks for your participation and the very interesting questions asked. I think we have continued to be bullish with the growth what Arvind has brought about, and there are many developments Rohit has explained on the MDO and also international operations. I think the NIP, which is contributing immensely for the opportunities, national infrastructure pipeline, both in the infrastructure, power sector, energy sector, and then which is getting converted, and perhaps most of the customers and even investors, they are very bullish on all these investments with aggressive projects being followed, implementation. We feel this profitability growth, EBITDA enhancement, and then the order backlog enhancement will continue to play in our operations. And one advantage for us, obviously, is that the more and more projects commissioned in the power sector, for example, 27,000 megawatts of power projects are under implementation, and that will come for some sort of a O&M opportunity that come next year also. That is why we have seen almost 2,000 crores of O&M orders coming as on today, which is a huge jump in our order booking in the O&M, and also the spurt in the orders what we got in the installation business and the civil works also for the power plant also. That is what we expect to continue to be there in the coming years, at least 2 to 3 years.
Thank you, sir. On behalf of Nirmal Bang Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.